Thank you for tuning in. Dividend Dashboard here. Welcome to the March portfolio update. There's a lot to unpack here. I will be going through the stocks I bought, including a brand new holding to the portfolio, dividends received, dividends year over year, and a portfolio update in full transparency. So without any additional fluff, let's dive in. For March, I bought 5 companies: Nike, Microsoft, Pepsi, Google, and the latest addition to the portfolio, S&P Global. For Nike, I added 2.2 shares, doing dollar cost average without making this position bigger than 3%. Nike has been struggling lately, but I do think they have the capability to turn it around. Microsoft, I added 0.43 shares. This is one of the companies that I want to have a higher allocation in my portfolio, so expect to see me buying additional tranches every single month. For Pepsi, I bought 0.17 shares, just a small dollar cost into this holding. One of my core holdings, Google, I bought 2.92 shares. Google is extremely cheap right now, and I don't see myself ignoring the opportunity of buying a high quality business with growing fundamentals. One of the drivers that made Google's stock price to tumble is the increase in capital expenditure for AI, which I strongly believe it will benefit Google's current products. However, investors don't like when capital expenditure goes up because it reduces the free cash flow, but this doesn't change the fact that Google is still a growing company. And the latest addition to the portfolio, S&P Global. S&P Global is a high-quality business that covers the areas of providing credit ratings, benchmark analytics, and workflow solutions in the global capital commodity. The company itself is a growth machine, and the fast-growing fundamentals make it a good fit to complement my core holdings and take my portfolio to the next level. I initiated this position with 1.08 shares. For the month of March, 10 companies paid me a dividend. Visa, $2.80. Kroger, $5.59, Johnson & Johnson, $8.74, Microsoft, 83 cents, Hershey's, $20.02, Realty Income, $5.87, Google, $1.50, Home Depot, $2.89, Waste Management, $3.43, and Pepsi, $7.01, for a total amount of $57.33 in dividends for the month of March. When I first started investing in dividend stocks, I knew the growth would be slow at first, but seeing it in action hits differently. Looking back at my dividend income year over year, the progress is real. It started small, just 30 cents in that first year, barely anything, but it was my foot in the door. That little payout felt like a spark. The next year, it jumped to $6.34. Still tiny, but the growth was already visible. That's the power of staying consistent and letting compound interest do its things. Year 3, I hit $12.42, doubling my income from the year before and giving me more motivation to keep going, to keep adding, to stay on the course. Then $28.81. That's a full tank of gas, paid entirely by passive income. The 5th year, $53.98. That felt different. That felt like a milestone. It wasn't just investing anymore. I was building cash flow. Now, in the latest year, I hit $57.33. The growth is slowing a bit, but I'm still trending upward, and that's what matters. Each dollar reinvested is planting seeds for future income. This journey reminds me that it's not about timing the market or chasing hype. It's about patience, consistency, and believing in the power of compounding. Moving on, we have a portfolio valued at $24,700 with around $600 in buying power, a dividend yield of 2.63% that translates to $520 in projected annual dividend. Portfolio is sitting at 21 holdings. Performance-wise, the portfolio is doing alright under the current circumstances. The market is pulling back every day, diminishing capital gains from investors' portfolios. My portfolio is doing better than all the indices by being 2% year to date. Despite currently beating the market, it is something to not celebrate. When the market goes down and investors are in fear, it should be taken as an opportunity to add more to my portfolio and revise my investment strategy, keeping an eye for daily opportunities that arises. Now you're seeing my 21 holdings, a combination of high growth and blue chip companies. Going clockwise, I have Apple, Colgate, Realty Income, Procter & Gamble, Waste Management, Kroger, Starbucks, JP Morgan, Home Depot, Johnson & Johnson, Nike, AbbVie, Texas Instrument, Hershey's, Pepsi, Visa, ADP, MasterCard, Google, Microsoft, and S&P Global. This year, I started a new phase of high-grading the portfolio by reducing defensive holdings and increasing more growth-oriented businesses, and so far, it has given me good results. Despite reducing the projected annual dividend amount, it has increased both the growth rate of the dividend and the portfolio value. Overall, in the state the market is in, I will continue focusing on my core holdings by buying more of Google, Visa, MasterCard, Microsoft, and we might add ADP and S&P Global into the mix. As part of my journey towards financial independence, I've been building out a dividend stock portfolio that does not only grows in value over time, but also pays me real tangible income. In the screen, you're seeing the annual dividend income I'm currently receiving from each of my holdings. While some amounts are still small, it's exciting to see how this stream continues to grow month after month. This reminds me that the progress in investing doesn't happen overnight. Every dollar here represents a small step towards financial freedom. I'm reinvesting all the dividends for now, letting the compounding work its magic. My goal is to continue adding to my highest conviction positions and gradually build this stream into something truly meaningful. As I continue to grow my dividend portfolio, I make it a habit to regularly track both my dividend income and the total return of each of my holdings. While my core focus is long-term compounding and growing that passive income stream, it is helpful and motivating to look at how each of my positions is performing overall. My portfolio is a mix of high performers like JP Morgan, Waste Management, Apple, and Kroger, and underperformers like Nike, Hershey's, Google, and Microsoft. But that's all part of the journey. I'm not chasing short-term gains. I'm building a dividend portfolio designed to generate sustainable income and long-term wealth through consistency, reinvestment, and smart allocation. Total return is just one piece of the puzzle. The real win for me is watching that dividend income grow month after month. I'll continue to DCA into my highest conviction plays and stay focused on the long-term goal, financial freedom through passive income. That will be it for this portfolio update. Thank you so much. If you want to follow along my investing journey, make sure to subscribe to the channel. Also, like this video so the algorithm can show it to like-minded investors so we can all share our journey together. Again, thanks for watching, and I'll see you in the next one.